about 75% of the population is making under $75,000 a year for their families. And so when you think about the United States literally being at an economic standstill, many people will lose their jobs. They're talking about at Morgan Stanley 3 million jobs in terms of the unemployment applications that are going to come up at the end of the month. We think it'll be higher than that. And so for that, there's great sadness and there's great trepidation. The good news on the flip side, though, is if the government can do what they're saying that they're going to do and provide this sort of relief, there'll be enough money in the economy to help the supply chain for food, help the healthcare supply chain. And they're talking about $75 billion for the hospitals. We suggested 150, but at least that's a good start. So the stimulus will at least send a message to the American citizens that their government is actually there when they need their government to be there in a time of crisis like this. And so I've told people this is so much worse than the global financial crisis. It's literally 9/11 plus the global financial crisis. And then we've had this homeland invasion. And it turns out the invisible soldiers are this army of viruses that are really putting a major stress on the economy and the healthcare system. So to me, I don't see how we get out of this in a quick way like the president's suggesting on Twitter tonight.
You were mentioning that the market is looking oversold. Do you think that we are close to a bottom when it comes to the current bear market that we're seeing, or how much longer do you anticipate that we are going to see markets on this downward trajectory?
Well, I actually think we're now in a secular bear market, and as the economic data comes out, we're going to be in a fairly steep recession. But remember, in bear markets, the most violent bull swings or upswings are those corrective phases. If there's a lot of people short coming into this stimulus, you'll see a major upswing over the next 48 hours if they can get the package done. Of course, if they can't get the package done, the market will trade very sloppy here. But no, I think we're in a protracted bear market. I think there's at least 10 to 15% more to go in equity prices here. The bond market is also seized up. You can look at where spreads are. Many of these spreads have now blown out past where they were in 2008.